So one thing that was key for me at the beginning of the year is that you can see right around the middle or tail end of January, we had this clear breakout from the monthly value area. And this coincided with around when we had that move in Nvidia and the semiconductors. And this really ignited the market. So a lot of what I'm doing is I'm tracking a theme. I'm looking for the reversal. I'm looking at the news that's coming out around the company, and I'm trading around that as well. In this trade, I had call options that doubled in value. I had some that more than doubled. I had common shares I maybe made like a 20 or 30% return on. And I was able to just kind of rinse and repeat this throughout the year in this stock. If the option has a higher delta, that means essentially you have a higher chance of being right on the trade. If it has a lower delta, you have a lower probability of being right on the trade, but you'll make more money if you do end up being right, and vice versa. The way to blow up your trading account is by adding to losing trades. So if you flip that logic on its head and you're one of the few people that adds to your winning trades, then hey, based off that logic, perhaps the opposite of blowing up your trading account can happen. Really just thinking about like the offense and the defense. If you play good defense, it really just sets up your offense. And that might be even the environment that we're currently in, that might be helpful. Just thinking about the defense. If you control any drawdown that you're taking, then when that next move comes, you're in a really good spot to take advantage.
All right, welcome back everybody to the TraderLion podcast, brought to you by the Ultimate Trading Guide. You can pick out that excellent free resource down below. Joining us today is Andrew O'Connell, full-time trader and top performer in the U.S. Investing Championship for now a couple of years running. He previously returned 255% in 2024, had triple digits the year prior as well. So Andrew, great to have you back. And looking forward to diving deeper into your strategy, talk through some of your best trades, some bad trades as well from last year, to, show the full picture of trading. But great to have you back. Thanks for being here.
Yeah, thanks so much for having me.
Of course. And just because some people might not have seen our previous interview, which I will post the link down below in the description, and definitely recommend checking that out after this one. Do you mind just talking a little bit about your background from a very high level view? If they want to learn more, they can check out the prior one.
Yeah, so high level background, I really got interested in the financial markets as a college student, which was maybe, at this point, 10 or 11 years ago. I took a financial markets course. I was an econ and finance major. And really what hooked me in was when I found out that in the financial markets, you build a portfolio. If your portfolio is the best, you're going to have the best returns. And if you get the best returns, that means you're the best portfolio manager. So I really got hooked in at around age 21. But when I first started in the markets, I had no idea what I was doing, and I really had no idea where to learn about the markets. So when I was starting off, I was really doing just a lot of news trading. I subscribed to Bloomberg, I subscribed to the Wall Street Journal, and started studying for the CFA exams as well and learning fundamentals. So yeah, in the beginning, it was really just creating a strategy on the fly, trading news, layering in fundamentals and some models I had created. And in my early years, I was able to catch some really nice thematic runs. I caught a Canadian cannabis run. I caught a nice crypto run pretty early on in my career. I was working at the Vanguard Group. I worked my way from a brokerage associate all the way up to a senior analyst on their fixed income trading desk, and got to learn a lot about the bond market, FX market, and how big funds are trading and how all these different asset types come together. So yeah, did that for a few years, ended up breaking into trading full time, and was doing options trading, common stock trading. I hit some snags along the road where entered a drawdown, started trading poorly, had to sell my car at one point, had to wait tables at one point, had to get a second job at one point. So I've really gone through a lot of ups and downs in trading. And I've been doing the US Investing Championship for the last couple of years, rebuilt my system. And so now I'm using a really wide array of tools. I'm using fundamental analysis, technical analysis. I'm looking at volatility in the options market. So yeah, I've put together a pretty diverse system now, and I've been running it the past couple of years, and yeah, just trying to string together a nice track record.
Yeah, I think your story, and again, if people want to learn more, definitely watch the previous podcasts. But I think your story is something that I think every trader, up and coming trader, can relate to, which is great to why it's so great to talk to you about this. Focusing in on 2024, I'd love to hear about your experience, re-entering the contest. You had obviously done really well, triple digits the prior year. Talk us through 2024 from maybe a high level view. What were your expectations going in? How did you deal overall with the year, and kind of what was it like being back in the contest?
Yeah, so from a high level, getting onto the leaderboard in 2023 was huge for my confidence. For me, whenever I refer to the contest, to me, getting a top 10 finish is essentially like, that's a win for me. So getting onto that leaderboard and getting the triple digit return really put me in a good headspace for 2024. But I knew that I still made a lot of errors in 2023. So some of those errors, one of which was adding to losing trades. I was still doing some of that. Um, and really, so the main difference for 2024 was no longer adding to losing trades. And I even layered in actually adding to some of my winning trades,
Hmm.
which made a huge difference and really just led to pretty much like an explosion in my P&L. Granted, 2024 was an awesome year for the markets.
It was, yeah.
Yeah, there were a lot of opportunities in 2024, pretty blessed with that, but was able to capitalize on some of those opportunities. And really, the name of the game for me in 2024 was like, hey, if I put on a trade and the trade isn't working, I'm going to take it off really quickly. I did a pretty good job of that. And really just trying to, if things are going well, just sit in those trades as long as possible.
Yeah, and one thing that is highly requested as a question, and I think it's pretty interesting as well. Are you trading for the contest any different than you would, your normal portfolio, or do you approach it in a different way? In the past, obviously people really go for it and use a lot of margin, all of that. How do you kind of approach your U.S. Investing Championship account versus, your normal account if they are separate?
Yeah, I would say it is a little bit different. Where for the US Investing Championship, it really is about getting size into my best ideas and really my best A plus setups. Um, for the most part, in 2023 and 2024, I was really just trying to get onto the leaderboard. So I would say there wasn't really a much of a difference.
Hmm.
My average position size for a really big trade for me, I would say if I'm not doing the contest, is probably going to be closer to 10% or 15%. Doing the contest, that bumped up to maybe 25%, sometimes even more. So I would say that's the main difference. To be honest, though, I was winning the contest. I found out in like September and October, and I would say that did actually impact my psychology. Where when I found out that I was winning and I was so close, it really made me want to try to win the contest. So towards the end of the year, I actually deviated from my system a little bit, sizing trades a little bit too big and kind of forcing the issue. But other than that period at the very end of the year, I would say for the most part, just trading my best. And I would say in many cases, doing the contest actually helps me enforce my risk management a little bit better. So
Yeah.
I think in some ways it can make you really good with your technique and your risk management. Everything is kind of like very process oriented. If I wasn't doing a contest, maybe I wouldn't, be as clean cut with that stuff and as precise. But then on the other hand, if you get too focused on winning and trying to put up too big of a number, then it can be, harmful as well.
And are you using margin any differently in the U.S. Investing Championship account versus your normal portfolio?
Yeah, so I never really trade on margin. To me, it's always just been like this weird thing. I never want to do it. But I do trade options. So I'm getting
Hmm.
leverage with those options in a very similar way that you could get leverage with margin. But for the most part, I really did not get too crazy with any of the leverage or any of that stuff. I was using my position sizing, except maybe at the tail end of the year, I started getting, pretty big in some positions, just trying to, seal the deal. So that's actually one of my goals for 2025. Maybe not even getting as big of a return, really just focusing on the equity curve and just kind of smoothing things out.
Right.
Because I think at this point, I've kind of proved to myself like I can put up big numbers, but really it's just like minimizing the drawdowns, that sort of stuff, and making the trading process feel smoother and a little bit easier. If you're always focused on like return maximization, then it makes things a little bit more stressful, like, a little bit more important than they need to be. So that's probably one of my goals for this new year.
Yeah, for sure. And 2024, like you said, was a really great year. but there's always periods where you're not trading well or not feeling like you're trading it to your potential. What was your experience during 2024? Were you pretty consistent with that? And also on the subject of drawdowns, what was kind of the biggest drawdown that you experienced last year?
Yeah, so I would say for the most part in 2024, it really felt like I was riding a really good wave of just perfect execution of my trading plan. Like I use my trend model to really guide me in the market. And it's really just telling me like, is the market, good for bullish setups or not?
Right.
And I was doing a really good job of just adhering to my model and that whole process. At the end of the year, that's really where I had some deviations where I believe my model turned negative in December and I was really still trying to push the pace.
Right.
So I ended up taking a big drawdown. In December, I took like a 20% drawdown, and that to me was a little too big. So yeah, there were months where I had really, good months. Like I had like one like 50% month. Things were really just falling into place for me. But yeah, I think, 20% is too big of a drawdown for me. So I had some errors at the end there that, not super happy with.
Yeah, and taking a step back maybe, and I want to get into specifics and show some trades as well. But from a very high level, you talked a little bit about your background, how you traded a lot of themes early on in your career. I know you still do that. From a high level, what is kind of your overall strategy? What's kind of your goals? What are you trying to be focused on? And would you classify yourself as a swing position trader? Maybe kind of give that context for people watching.
Yeah, so I'm definitely a position trader. So I'm really looking for big, juicy themes that I can sink my teeth into and hopefully hold this thing for, let's say, like 3 months, 6 months, 9 months. There are some themes that I've been tracking for years, and it's really like I'm waiting for that theme to come to fruition. I'm doing research on the theme, and I don't trade it for extended periods of time. So that's really what I'm looking to do. I love trading trend reversals.
Hmm.
So using stage analysis and really looking for that transition from a bearish trend to a bullish trend. That's something I really love doing. If I kind of understand the theme and I can see that something is going from a downtrend, now it's basing out and it could be turning, those are my favorite kinds of trades. But I have really like 11 setups in my playbook. Sometimes I'll be trading the VIX, sometimes I'll be trading bonds. I've really just tried to pick up more setups as I've gone on in my career. So, yeah, for the most part, I'm a position trader, but I don't really fall into one, distinct bucket of trading,
Right.
I would say.
And looking back on 2024, um, would you have a sense of your statistics, your average win, average win, average loss, your batting average? Do you have a sense of what those numbers were? I don't know if you've done your 2024 review yet, but if you have that, that'd be great to add.
Yeah, so I did a light review of my stats, and my win rate in 2024 was slightly above 50%, which is a really good win rate for me. And then one thing that I track very closely is how long I'm holding on to my losing trades
Yeah.
versus my winning trades. And I had about a 3-to-1 ratio of holding on to those winners versus losers, which is great for me. So yeah, last year, in terms of risk reward and everything I'm trying to hit, last year was a pretty good year for me. But I haven't done my deep dive into my numbers yet.
Perfect, Andrew. And if you don't mind kind of going through the year from a high level and talking about, where you were aggressive, maybe where you had a larger drawdown than you'd expect. Yeah, take us step by step through 2024.
Yeah, so I think 2024, in many senses, had a really clean cut start to the year, where you can see on my chart here we have the S&P 500. And these boxes, these are monthly value areas. So it's really just showing us where the majority of volume occurred in the prior month.
Hmm.
So one thing that was key for me at the beginning of the year is that you can see right around the middle or tail end of January, we had this clear breakout from the monthly value area. And this coincided with around when we had that move in Nvidia and the semiconductors.
Yep.
And this really ignited the market. For the most part, I didn't trade a whole lot of Nvidia. I really did not participate in that semiconductors theme, but here I was long the market, pretty aggressive in some trades. In January, I believe I traded this this MSOS, which ended up pretty much like imploding later on in the year. But this was one of the best performing groups in that early period. Because pretty much what I was looking for in here at that time was this was an election year. That was also something that was really at the front of my mind. And the market tends to do very well in election years. This was a group where potentially we would have some political noise here. And this one was really a big driver of my P&L in January and February. But with that said, over here, this is where we got this huge move in Nvidia. So
Mm-hmm.
really nice move off of these lows. And there was just a lot of really good participation in the market around this time. Some bigger trades that I had as we move on through the year. One theme that I was very cognizant of is a potential bottoming out in China equities.
Mm-hmm.
And the name that I was trading pretty much for most of the year was Alibaba. So if I flip over to Alibaba, I was really looking for a trend reversal here. And you can see in the first few months of the year, this thing was going from pretty much like a big downtrend you can see way earlier to now just moving sideways.
Mm-hmm.
And you can see
Stage
these
one.
exactly, yeah, the stage one base. And another thing I look for is just these overlapping monthly value areas, which are pretty much pointing you in the same direction as, this is the stage one base. For me in my trading, I use fundamentals. So you can see here, I have this little dashboard on my trading view setup. So I'm looking at the sales growth of the company, what their EPS is, what their gross margins are. I'm looking at how much they spend on R&D, what's their return on equity. And really what I noticed was, hey, Alibaba, this thing compared to US stocks, the valuation's incredibly low. Here it is basing out for several months. And around this time, I became aware that there were some really big investors. Like David Tepper was building a position in this, Michael Burry was building a position in this. A lot of these incredibly smart guys on Wall Street. And then another thing I was cognizant of is this thing pays a dividend and they also do share buybacks pretty aggressively.
Mm-hmm.
So I love when companies, when I'm looking for these big reversals in stocks, a lot of times what I look for is does the company do share buybacks? Because when they do those share buybacks, then hey, that company's literally in the open market buying up their own shares. They see value in buying at this level. And during, I believe it was April, I was really just accumulating a position in this stock as it was approaching the lower end of the base. And I was able to participate in this really nice, pretty frenetic move higher in Alibaba, where it cleared all of these key moving averages. So yeah, in Alibaba, I was trading this stock very well. Like I pretty much sold the stock as it was getting into the highs here, maybe within a day or two of the top. I just noticed the stock had moved very far, very quickly. We had an extension away from this blue line, which is the 50-day simple moving average, and I was hitting out of the stock pretty much into the highs here. So that was a big P&L driver for me. I was trading call options in this stock, and the call options I was trading had about like 1 year until expiry.
Mm-hmm.
They're really just giving me a nice pop, giving me some leverage. I was using in the money calls. So the position's not quite as explosive if you're going with some like, shorter term, let's say like a weekly option that's out of the money. I never really trade those. I usually go for leaps and deep in the money. And then what I was able to do, I pretty much reloaded on the stock, within a day of the lows. And what I noticed here was on July 1st, it may have been July 2nd when this stock actually bottomed. There was a headline or a press release that came out from Alibaba and they were talking about their buyback program and we might be boosting the program, that sort of thing.
Mm-hmm.
So I bought this thing right off of this monthly value area low as soon as I saw that press release hit the tape. So a lot of what I'm doing is I'm tracking a theme, I'm looking for the reversal, I'm looking at the news that's coming out around the company, and I'm trading around that as well. So I was able to reload this thing pretty much on these ding dong lows. And as this thing started to form almost like a VCP pattern up here into August, I was pretty aggressively adding to this position. My conviction was building. I was getting traction on the trade that I currently had on.
Hmm.
And this is the first time really in forever where I was adding to a trade that I was winning. And that's a huge thing. Like typically in the past, like I'll be adding to a trade that I was losing or something like that. So if you think about it, like the way to blow up your trading account is by adding to losing trades. So if you flip that logic on its head and you're one of the few people that adds to your winning trades, then hey, based off that logic, perhaps the opposite of blowing up your trading account can happen. So yeah, with this one, I was accumulating this stock, and I was adding common shares and options. And another thing I've been doing more recently is really just like accumulating some stock over time rather than just one big shot or big entry in the stock.
Hmm.
And here we ended up having to break out from this monthly value area. And this is pretty cool. So we had the 200-day simple moving average, the 50-day above that, the 20-day simple moving average above that. So we started to get these signs that, we could be moving into an uptrend here. And this stock, really just had a pretty crazy explosion to the upside. And I was hitting out of this stock. I believe I hit out of most of it in this candle September 24th,
Hmm.
this candle September 25th, and this thing really just, continued to move. And then even as this stock was kind of moving down here, I was selling put options in this thing. I really just had like the timing on this specific stock down, and I was really just like hitting the same stock repeatedly over and over with trades. So yeah, this one I was able to pretty much like ride the upside. By the end of the year, when Trump won the election, this stock really wasn't even a big winner for the year, but it just ended up being a big P&L contributor for me.
Yeah, and I've got a few questions on this, Andrew. So this is such a great example.
Yeah, go
First,
ahead.
exactly what you said. Looking back on the year, what were some of the key stocks that you think contributed the biggest to your performance? Obviously, BABA, it sounds like definitely was one. Are there any others that really come to mind?
Yeah, MSTR was a big contributor for me. And
Yep.
this,
Andrew, I'll let you pause you here because I've got some more BABA questions, but let's come back to MSCR for sure. Um, First, you mentioned buying versus the value areas. Is that your typical strategy for looking for that trend reversal and then playing a name with options is looking for that stage one base, looking for the value areas stacking up, and then looking to accumulate it sounds like leaps or long, long expiration options, as it pulls into the lows of that value area.
yeah, so for the most part, if I'm trading options in a stock, like let's say I'm using call options,
Hmm.
for the most part, I wouldn't be trading call options like let's say on a breakout.
Right.
Usually when I'm because when the stock breaks out, typically the implied volatility in those options really starts increasing and then you're really paying up. And then sometimes even if you get a move in your direction, it doesn't really show up in your P&L, that sort of thing.
Right.
So a lot of times what I'm doing is if something is bouncing off of the monthly value area low, that's a lot of times where I'm using options.
Hmm.
If something is breaking out, that's typically where I'm using common stock. And this one, which was really interesting, there was an earnings report in here. And I noticed this earnings report, the stock gapped lower right down into the 20-day simple moving average. And, it really couldn't hold the lows and it put in a green candle. So when that happened, I even added to my position again. So I was
Hmm.
already long call options from lower prices, maybe down here. And then I was adding common stock when this thing, potentially should have gone lower on the earnings report, but there was a bid there. So that was another good tell. And this green candle happened on high relative volume as well. So yeah, a lot of what I'm doing is rather than always trading the breakout, a lot of times if something is in a base, I'll try to buy towards the lower end of the base. And that way my invalidation point's pretty much like right below where I entered, and it makes things very easy. So my ideal entry in a stock, like if I understand the fundamentals, I understand the story, and pretty much everything is lining up for me, I'll have entries in that thing towards the lower end of its base, and then hopefully also have entries like I did with BABA as it's emerging from the base as well.
Yeah, I loved what you said there about earning that the earnings and the expectation. It was trying to sell off, it couldn't, and then it put in that candle, and that's a sign there. Um, in general, could you walk us through your process for how you structure your options trades? You said, long-term expiration, leaps, deep in the money. Maybe take us through an example or just like a scenario that you typically follow as you decide, all right, this stock looks pretty good. Let me decide to, how I'm going to place this trade.
When it comes to trading options, usually I'm doing this for mega cap stocks, that had trade incredibly high volume every single day, market cap
Very
in the
liquid.
billions, so on and so forth. Yeah, very liquid stocks. Typically what I'll do, say if I'm bullish on Alibaba, for the next like 3 to 6 months, I'm usually looking at options that are maybe a year out, somewhere around that time frame. So perhaps like I'll be looking at, I think Alibaba is going to have a good year. So maybe I'm looking at these December options.
Right.
And then typically what I am doing is I'm looking for stocks where the bid ask spread is pretty narrow. Because if you trade options on companies where, let's say there's just not really much volume in the options, you'll really get crushed on the bid ask spread. And typically, what I'm doing, the delta of these options is right over here. If the option has a higher delta, that means essentially you have a higher chance of being right on the trade. If it has a lower delta, you have a lower probability of being right on the trade, but you'll make more money if you do end up being right, and vice versa. So rather than going for the really risky stuff like deep out of the money, that kind of thing, usually I'm trading an in the money option. So if
Hmm.
Alibaba right now is trading at 85, typically I'll be looking for maybe like the 80 strike option. This one right here has a 68 delta.
Hmm.
So what that means is if Alibaba stock, you're in this option, if it goes up in price by $1, you're going to make somewhere around 68 cents on your options contract. And the delta will change. The delta will increase if the trade goes in your favor. It'll decrease if it goes out of your favor. But really, what I'm trying to avoid is I don't want huge theta decay in
Hmm.
the option. So, like you can see on this option, the theta is negative 0.02. So, in theory, you're losing about 2 pennies every single day that you're holding on to this option. But typically, what I will do is I don't really want to worry about the theta decay. So let's say I'm holding on to this thing for a month or so or 2 months. A lot of times I'll roll that option out in time. That way I'm really not focused on, the timing component. I'm really getting a delta exposure to the option, um, and really focusing less on, the timing of the move, that sort of thing. The other key element that I'm looking at as well when I'm trading options, and everyone does this a lot, everyone has their own style, but this implied volatility, I like trading long options on stocks that have a lower implied volatility.
Hmm.
So Alibaba, we can see it has an implied volatility of, this option is 34.59%. If we jump over to MicroStrategy, which is another
Might
stock I
might
was
be a little
trading.
bit higher, I wonder.
Yeah, yeah. So this one, if you look at the implied volatility, it might take a sec to load up. Or let me actually go to the closer options. But yeah, the implied volatility I checked earlier today for MicroStrategy, it looks like it's not loading here, but the implied vol is somewhere over 100%.
Yep.
So what I like doing as well, this is kind of a tangent, but if you look at the implied volatility of these different stocks, it will tell you how much market makers are implying that that stock could move. So a lot of times, like I'll be looking at a stock and it's like, hey, Alibaba, the implied volatility is really low. I actually think it could make a really sharp move. So that'll really add to the case of maybe, hey, this one I'll trade via options. With MicroStrategy, these option prices are incredibly juiced. So for this, I'm always going to be trading common stock unless
Hmm.
I'm, selling the options.
Yeah, perfect. And how do you decide your position sizing for the options trades? Maybe use the example of a standard size, a decently high conviction name, but nothing extraordinary.
Yeah, so if I'm flipping back to Alibaba, typically what I'll do is I like sizing my options trades for a max loss. So essentially, like, let's say Alibaba, I'm super bullish on it for the whole year. I'm going to put this trade on. Maybe in this trade, I'm putting up 5% of my capital. And
Hmm.
I'm going, hey, if I lose this trade, if Alibaba does nothing for the rest of the year, if it flops over, I'm taking a 5% loss. With that being said, I'm well aware that if I'm getting this option that is deep in the money, and if my option is, far out in time, like let's say again, it's these December options
Right.
that have, 346 days until expiration, 10 times out of 10, I'm hitting out of the options. I'm never letting them go to zero. So it's basically like I size them for a zero just in case like something, really bad happens. But for the most part, I'm always taking them off. A lot of times, like I'll take them off for a 5% loss if the stock does something I'm not expecting, like a 10% loss, whatever that might be. So, yeah, what I found with options, you really can't do risk control. Because early on when I started trading options, it would be like, okay, I'm going to trade like a 1 month option and I'm going to have really tight risk control. But what tends to happen is like the stock goes down by 1%, the option loses 35% of its value.
Yeah.
And yeah, if you stop out of your trade, then the next day it goes up 1% and you're back where you started. So that's kind of why I prefer trading these options that are deep in the money and they're leaps. That way, yeah, the risk control is still tough, but it's more manageable.
Yeah, with options, it's like your position sizing is your risk management more than a stop loss. And that was actually a little surprising that 5 to 10%, because that with what you said, 5 to 10% on an options trade, that's pretty tight risk, a stop loss almost, because they can move so much. But I guess these are leaps, so it's going to be a little slightly less volatile for sure.
Yeah, so with these, when I'm using these leaps, it's kind of for a stock that I think might be making that transition maybe over the next year or whatever it might be.
Right.
And these are kind of sleepers where because they're sized a little bit smaller, let's say if the market has like a little bit of a dip or the stock dips or whatever, it's not really as much of a concern. Whereas if I'm trading, common shares and I put, a 25% position or like a 30% position on a trade, if that stock is starts moving against me, like I really have to hit out very quickly. So a lot of times I'm using the options. If I think a theme, because it always happens, like there'll be a theme where in the beginning of the year, I'm so bullish on it, I lose track of the theme. And then before I know it at the end of the year, I'm like, man, my most bullish idea, like I didn't even trade it. So that's where that kind of comes into play. Like sometimes in the beginning of the year, I'll be like, okay, let me put just at least a small kind of starter position where if this thing does something, then I'll at least be participating.
Yeah, it makes sense. And for Baba, you mentioned obviously where you're kind of selling into strength, both for the first trade as well as the bigger extension. And you talked about how you're watching the distance from the 50-day moving average. What kind of rules around that do you have, and how do you decide, I guess, when to sell to strength? Because I know that's something that probably a lot of people watching, we're always working on sell rules. That's the really tough part of trading for sure.
Yeah, I would say in terms of those sell rules, it's very tough. And I think it depends on how systematic you want to be versus how discretionary you want to be. So for me, I'm watching the market every single day. I'm intimately involved with these stocks. I tend to only have, let's say, like 3 to 5 positions on at any given time. So for me on my exit, I'm using a little bit more discretion.
Hmm.
You could use a hard rule like, a 10 ATR extension, something like that. But for me, a lot of times, like for this one, I use discretion to hit out of these.
Hmm.
And so like I was looking like, okay, this is a pretty crazy gap higher, but it's just moving out of the consolidation. if we look at the history of Alibaba prior to this, it's never really been able to sustain any of these huge extensions.
Hmm.
So for this, especially since I was using options, a lot of it comes down to like how much have I risked in this trade? Has it hit my objective? And that's kind of what I use as my guiding principle. Like, have I earned a multiple of my risk? Usually I'm looking for at least a 2-to-1 reward to risk ratio. And once something hits around that level, usually I'm taking a piece of it off. And especially if you're trading options, you pretty much have to be selling them into strength. So a lot of times it's like, how greedy do I want to be with this position and that whole thing? And so for this, I would actually hit out of it, kind of early. Like I was hitting out of most of my position into the 90s. It ended up having, an even bigger run before falling. So yeah, I think as I go on in this trading journey, perhaps like as I start to get older and I want to spend less time on the screen, maybe I'll develop some rules like, hey, if it hits a certain historical extension, like that's where I exit. For me right now, it's still, pretty much a discretionary process.
Yeah, and obviously you sold this one into strength, and it looks like you sold early, but in the moment, I mean, that's already pretty extended. It just got crazy, even crazier. So this was a powerful move for sure. Um, yeah, let's bring up MSTR now, and maybe you could talk through that trade, because obviously, or you kind of mentioned that you're trading more shares there versus options. So it'd be interesting to hear kind of that perspective.
Yeah, one other last note on Alibaba, just a really interesting part of this trade. So when this thing was, moving out to its highs, David Tepper came on CNBC. And I was aware David Tepper had accumulated his Alibaba position, like, pretty much where I was originally accumulating it while it was in this base here.
Right.
But then as the stock and really all China stocks were coming out of this consolidation, then he appeared on CNBC, like pretty much like, he appears on CNBC. He tells everyone like, "Oh, these China stocks are the next best thing. Like, you got to buy them." And that's where it had this like just wild blow off. So for me, sometimes, in terms of the discretionary element of selling into strength, when I see, the guy who accumulated much lower is now on TV, pumping this stock, that's usually just like a good a good signal for me. Like, hey, now I should probably be like hitting out or closing some of the position because the asymmetry of the trade might actually be declining. So I'm always looking for the asymmetry.
Yeah, and you said you actually put on some puts later on after it kind of, topped there. So, for sure. And t taking a step back, one more thing on Baba. Do you know do you know offhand the percentage move that your options did for this particular trade, or your P&L move contribution for Baba?
Yeah, so in this trade, I had call options that doubled in value. I had some that more than doubled. I had common shares I maybe made like a 20 or 30% return on. And I was able to just kind of rinse and repeat this throughout the year in this stock. So
Hmm.
it was kind of weird because while this is happening, I'm looking at my Twitter feed and like no one's talking about China stocks, like everyone's trading other stuff. And I was just kind of in a zone trading this stuff. So a lot of times, like I'll just be in my own little zone over here trading this other thing. And yeah, sometimes it works like it did here.
Yeah, I did an interview with Sean Ryan last year, and he had a great year, I think, in 2023, but he wasn't really trading what a lot of people were talking about. He was, like you said, focused on his own little universe and executing well with those names. And so, I think that's a good point. You don't have to be trading whatever everybody else is focused on. There's so many great moves that happen during the year, and you just have to catch a few to have a fantastic year like you did. And how you traded Baba here actually reminds me of talking with Oliver Kell and obviously his great 2020 year, where Tesla was a huge driver of that, where he just was locked in and trading that really really well. So yeah, if you focus and really narrow your focus, you can have tremendous results just trading a handful of stocks as you did last year. So yeah, this is great.
Yeah, for sure. Yeah, there's almost like two different kinds of styles, I would say. One is you're really you're trading specific patterns, and whichever stock is exhibiting that pattern, you are flipping from stock to stock, as
Right.
frequently as you need to be. And then there's another style where it's like you're really trading like one chart. And you might be trading that chart, as it's going from an uptrend to a downtrend, as it's basing. Like, yeah, if you're really just hitting one stock, correctly, sometimes that works as well.
MSTR, what a move.
Yeah, this thing was phenomenal. Yeah, throughout the whole year. But yeah, with MSTR, this is one that I really first started to get involved in MSTR. I missed this first move in February. Like this was really fantastic, awesome move. I was very bullish on the crypto theme. But yeah, for this one, I was like, hey, let me just wait this out. This thing a lot of times similar to BABA, like it booms, it busts, that whole thing. So I really just waited around and I was able to get involved with MicroStrategy in May after this pretty deep pullback in the stock. It kind of chopped around here. It looks like it made this sort of capitulation low, but it really didn't make any downward progress when it did that. So I was able to get involved with MicroStrategy really as it was forming this little base here right on top of the 20-day simple moving average.
Hmm.
And this was another thing where I would say throughout 2024, in the beginning and middle part of the year, I was really taking trades and like for this one, like I hit out of this one into strength on like a relatively small move because at the time I was like, I don't really know if the market's just going to keep following through like it did. And then now in hindsight, like when we look back on 2024, we can really see the momentum was really just like building in the market the entire year. And then things really accelerated at the end of the year when, the cat was pretty much out of the bag and, a
Yeah.
lot of performance was already on the board. But yeah, MicroStrategy, I traded this one multiple times. I first got into this stock here, closed this out into strength, and then I hit this stock again as it was exiting this tight monthly value area right here.
Do you like when they're tighter? Is that, a focus of yours? I guess that's kind of a compression in volume and volatility and kind of a sign for that. Yeah.
Yeah, so it's a lot of the stuff that you guys are tracking as well, really the compressions
Yep.
in the stocks, like, it's all kind of just really displaying the same thing. So yeah, I love it when there's a stock that has these multiple overlapping value areas. Then those value areas start to tighten up. And here we can see like this thing was pulling into the 200-day simple moving average. So we had sort of that flush out in the stock. And then the demand just comes right back in pretty steadily for about 2 weeks here. So yeah, these are pretty ideal setups. Like these breakouts from consolidations, classic stuff, like very wide bases. And we just ended up getting this pretty fantastic move. Again, this one, like I pretty much sold this thing too early. I was selling this thing into strength in this like 245 area.
Hmm.
But yeah, it ended up having, an even crazier blow off move. And I noticed right around these candles, like let's say from November, let's just call it November 6th, all the way up to where it had this top here, November 21st. This is really when I started seeing all the news outlets. They're all talking about MicroStrategy. Everyone has an opinion on it. Every person that's on financial media, they're being asked about what they think about MicroStrategy. It's all over Twitter. And it's really just like hitting this mass appeal where everyone is looking at this. It's going parabolic. So yeah, I missed kind of like this parabolic phase of the move, but still a good trade here.
Yeah. Any key takeaways from this one? Anything that really stands out, or you think would be a good lesson for traders watching?
Yeah, I think one element that perhaps I'll be adding into my system is perhaps just leaving on some shares and trailing a stop. I would say that's probably a takeaway most people have from 2024 because in general,
It was
things
trending. Yeah.
really they
Yeah.
trended hard. Like 2024 was a great year for can slim trading. Like it was just awesome. So yeah, I think for some of these bigger thematic trades, perhaps leaving some on and leaving a trailing stop. But at the same time, the other thing is too, and this is important for anyone listening, sometimes what'll happen is it was the same thing in 2020. At the end of the year in 2020, if you looked at pretty much any trader, And their takeaway from the year, it was like, man, I need to be letting my winners run way longer. Like that's a huge weakness I have.
Yep.
But then when the market topped and the market got way more difficult, then that following year, it was like, man, I need to work on my risk management and
And selling into strength and all that.
yeah,
Yeah.
selling into
Yep.
strength and maybe I need to start shorting and whatever. So on the one hand, like you want to be updating your strategies and that sort of thing, but it's also tough. You don't want to like change your strategy just because you were just in a specific environment either.
Yeah, I think that's really important. I've kind of been thinking that as well as I did like a trading report card thing and yeah, I think it's really good to reflect, but also understand the environment, dictates what the ideal strategy would be each year. So I think that's important to remember. MSTR and crypto obviously were a huge theme. Did you play the crypto theme any other ways, or what were kind of the key themes outside of crypto as well that really stood out and you were focused on, including the China names, of course?
Yeah, so crypto's a theme. In my US investing championship account, pretty much I trade MicroStrategy to get exposure. And
Hmm.
it's pretty much like if I look at the Bitcoin chart and it looks good, pretty much using MicroStrategy. I guess now we have IBIT, which is good. Um, but yeah, and then I have a long position in Bitcoin in Coinbase as well, but that doesn't count for the contest.
Hmm.
And I actually sold that around 100K. So now I was holding on to my Bitcoin since like maybe 20,000 or 25,000, and I sold it around 100K. So we'll see what it ends up doing. But another theme that I was watching very closely was really what was happening with interest rates in 2024. So we have this TLT, which is now, just breaking down pretty badly. But really, like we still have this inflation theme that's going on in the markets. And so, like, if we zoom back, let's go to, yeah, we'll go towards the beginning of 2024. So, yeah, we can see TLT was pretty much in a downtrend for the first couple months of the year. And then we can see it formed this base in April. And we actually had a pretty good uptrend in TLT for a few months there. Then it ended up resolving to the downside once again. So there are certain themes and certain groups of stocks that tend to trade well when TLT and really just long-term rates are in a bullish trend. So one stock that I traded when TLT was kind of moving off those lows was Rocket Mortgage. And this one, yeah, was another good mover as there were plenty throughout 2024. And this one we can see Rocket Mortgage. This was when mortgage rates were starting to come down. When that happens, there's potentially a lot more people that are going to refi their mortgages, and that's good for Rocket. And so this one was really like a classic VCP pattern that I was able
Hmm.
to trade in this stock. So I was able to trade this in July and August. I was also long the TLT here as well. And this really helped me in the contest. There was one point in the year in July where let me just flip over to SPY to
Hmm.
illustrate. There was a period here where the S&P 500 topped out in July, and during this period, bonds actually did pretty well. And I was long call options in TLT. So there was a period in the summer where the market had a nasty drawdown, and I actually had a pretty nice boost in my account because I was long things like bonds, I was long Rocket Mortgage, these things that tend to do well when interest rates are coming down. And then what was just pretty bonkers was I closed out those positions. It was kind of like long bond positions, pretty much into the lows of the S&P 500, and then I was pretty much able to ride the market back up. So one thing I've noticed in my trading is like in order to have a really good year, I maybe need like 3 or 4 good trades. And then a lot of times what helps as well is if there's a fairly significant market drawdown, which there always is, there's usually a few every year. If I'm able to sidestep maybe just one of those corrections, that's also a huge performance booster.
Yeah.
And then if there's one of those where not only am I able to sidestep it, but I also gain P&L during it, that is really like it just takes your performance to another level. So yeah, really just thinking about like the offense and the defense. If you play good defense, it really just sets up your offense. And that might be even the environment that we're currently in, that might be helpful. Just thinking about the defense. If you control any drawdown that you're taking, then when that next move comes, you're in a really good spot to take advantage.
Yeah, confidence wise too, not just with your account. Protecting those gains and not drawing down too much. It helps you mentally be ready to catch and be in a positive, headspace. And be you need to be positive to say, all right, we might have bottomed here. Let me test positions, all of that. So, I think the longer I do this, the more it's almost psychology is so important, and that comes with good risk management. Good risk management is how you get good psychology, at least in my view.
Oh yeah, 100%. Yeah, and especially too, like if you're long a bunch of stuff and you end up riding it down, which I've done plenty of times in the past. Luckily last year I didn't really do that. But yeah, if you end up riding a bunch of stuff down, then like right as the market's bottoming, you're kind of thinking about selling your positions and you can't really see the game board
Right.
objectively. So a lot of times like as things are starting to get good again, you're just not really seeing that they're getting good again. And so yeah, if you're like pretty much in cash or you've even generated some P&L during that period, it's almost like you're just able to see everything a lot clearer. Like there was the one day last year where the market took a big drawdown, and it was the day when all the brokerage platforms like temporarily went out in the morning. On that day, I was really aggressively getting long stocks. Like I think I was trading Alibaba and I was trading MicroStrategy, and it was really just because I didn't suffer a drawdown.
Right.
But yeah, that's why I think in trading, a lot of times it's sequences where like if you go from capturing a nice uptrend to then playing really good defense, then your confidence is so high because you're like, hey, I'm executing my system properly, I'm doing my risk control, and then you're in a really good spot to take advantage. Like if you overstay your welcome, you don't follow your rules, you're like getting dragged down and stuff, it can really like fall cascade into the
Yeah.
next good sequence.
Yeah, for sure. And looking back on 2024, were there any other key trades that you think really had big contribution? We've gone through BABA, MSTR. Were there any other big ones that really stood out? Obviously, the end of the year, there are a lot of really nice trends to pick and choose from. Um, but yeah, any key trades come to mind?
Yeah, I would say for the most part, my big P&L movers for the year really were Rocket Mortgage, MicroStrategy. I was trading throughout the whole year. Alibaba, I was trading throughout the whole year. And then really just, trade in the S&P 500, trade in the NASDAQ. But those were really like, I looked through my stats and I'm like, dang, it was really like three assets that contributed the most to my P&L. So there were a lot of other like little trades here and there, but that was really the main thing. At one point, I had a pretty good short in Nvidia,
Hmm.
and it was yeah, I got pretty lucky in Nvidia where I caught it was one of these like outside reversal bars,
Yeah.
and I pretty much like nailed the thing right at the top. Just honestly pretty lucky, and that was a good contributor as well. Like any day the market goes down and I'm able to generate some P&L, that's always really, really good. And yeah, for me, it's like I tend to not trade as much as maybe some other people. So yeah, it's really just like I need to get three or four good trades in the year and then not get decimated on some other trades that end up being my losers. Because there's a lot of losers too.
Yeah, and I actually want to cover a few. I don't know if there's any losers that stand out. Like you said, you probably cut them pretty fast, but yeah, any key losing trades that come to mind from last year?
Yes. So I tend to remember these losers even more than the winners. But yeah, this one, MSOS, this one was honestly a really bad trade. So with this one into the election, because that was
Hmm.
another key dynamic in the market.
It was.
Yeah, so leading into that election, I believe things got a little bit softer overall, maybe, and there was like some hesitancy and volatility picked up a little bit. And then coming out of that election, there was a really nice move in the market. One of the trades that I had on the books going into the election was this MSOS cannabis ETF. On the day of the election, there was going to be a vote on Amendment 3 in Florida. That could have been very bullish for MSOS. And then also, I was pretty convinced that Trump was going to win the election. Poly market had it way ahead of time, and then the financial markets sniffed it out way ahead of time. So I was of the mindset Trump's going to win this election, and it's probably going to end up being good for the market. Um, but yeah, one of the trades I had on into the event was MSOS. And I had like a 25% position in this thing, and Trump ends up winning the election. So I was like, just in case he doesn't, if Kamala wins, MSOS could literally like triple, based on what I've been seeing. So like earlier in the year when there was positive news about rescheduling,
Hmm.
MSOS got all the way up to maybe like 12 bucks, 11.50, somewhere around there. So in my mind, I was like, we could perhaps get back there on a good result here. But yeah, Amendment 3 did not end up passing. Trump ended up winning the election. And this was just, a pretty nasty gap lower. I think this thing lost like 25 or 30% value overnight.
Oof.
So it kind of ruined my flow for that whole sequence. I was also long Alibaba into this event, which was a great P&L generator for me throughout the year, but also the China stocks took a leg down as well. So for this, I immediately cut my position, which was great, but took a hit on the trade nonetheless. But then where I really messed up and kind of deviated from what I was doing was I cut my position, and then there is actually a potential rescheduling of cannabis from a Schedule 1 drug to a Schedule 3 that could happen in Q1 of 2025. I was of the mindset, hey, that could still happen, and perhaps this is an even better buy now. So I repurchased MSOS. I pretty much caught this low right here. I ended up revenge trading it where I took even bigger size in the trade, oversized it. I was really trying to win the contest, and it ended up going really well for the first like 2 days of that sequence. But then this thing just death marched pretty much as most other things in the market were just having incredible rips to the upside. So this thing, my psychology was kind of off. I got thrown off by like that gap down. Sure, I followed my risk management, but ended up re-entering, which I really should not have re-entered. This was kind of like a pretty much like a revenge trade. The other thing that I'm now very cognizant of, I always have been cognizant of this, but I just fell into this trap. When assets have negative momentum on a year-to-date basis and you're in Q4, that's where they can really go into the death spiral. The same way that those assets that have good momentum in Q4 can keep shooting to the upside. So for this one, I ended up hitting out of this. I followed my stop loss, but it just took so long for it to hit my stop loss. And I was kind of holding on to hope. And I was like, oh man, like, now I'm going to lose this contest. And I think just being in the contest kind of
Threw
tripped
you
me up a
off.
little bit.
Yeah.
Yeah, so this one, yeah, this was my worst trade of the year by far. So this was my big drawdown. Um, so yeah, this one, part of it was, hey, a bad break. I was kind of in the trade. I knew that could happen. You take your loss and move on. But then re-entering with bigger size, really wasn't the move, especially in Q4. So yeah, that was really tough to stomach that loss, but it was a learning lesson.
Yeah. Do you have any rules or have done any kind of reflection on, like you said, you were aware of the catalysts around this, the election, the vote as well. Do you have any, are you thinking of any rules potentially about, lowering risk when there's something like that happens? Obviously, it could have ended up being a positive catalyst, and some of these catalysts, are very binary. You never know, especially like earnings. But I don't know if you've had like any thoughts about that, especially because the election, like you said, really switched things up this year and kicked things into gear for some stocks. While with MSOS, it kind of entered the death spiral as you put it.
Yeah, so for this, I think going into this event, I really think I would take that trade 10 times out of 10 because
Hmm.
in my mind, If that had gone the other way, let's say like Amendment 3, it needed a 60% vote to pass. I think it got like 56%. If Amendment 3 had passed, and let's say Kamala had unexpectedly won that election, I really think MSOS could have tripled very fast.
Right.
Um, but yeah, this thing, yeah, just ended up kind of doing the opposite. I really was not expecting like a 30% gap lower, because I really thought that the rescheduling was not priced in here. So I would say the original thing was a bad break, and that's like you just got to live with it. What I really should have done in this situation is hit out of the stock or the ETF on that gap lower, and then just really pivoted to the relative strength and what was working.
Right.
If I had done that, then this would have just been like a run of the mill, slightly bigger loser because of the gap. But, we all have those in trading. Like I've had those a couple times where you're in a stock, tape bomb comes out and you take a little bit of a bigger loss. But I would say the real mistake, what I will never do again, is re-entering the thing that has a low momentum, low relative strength. Really just trying to like hero trade it in Q4 and just trying to revenge trade it. So that's really the thing. I never should have been in that trade. Nothing in my system's telling me to really do that, but it was just kind of a little bit of an error.
Yeah, I think everybody watching this can relate to that type of trade, right? And you take a big loss, you want to get it back, you become a little bit more fixated. It's still in the back of mind what happened. So I think everybody can relate to that who's watching this. Were there any other bigger losses? This sounds like it was the main one for 2024, but I don't know if any other key ones come to mind.
Yeah, to be honest, like this is the one that comes to mind.
Hmm.
Overall, throughout the year, I would say I did a really good job where I was wrong on plenty of things. And some were trades I was sized very big in. But for pretty much every other trade, as soon as I was wrong, I was hitting out of that trade and doing a really, really good job with that. I would say, yeah, in Q4, that was where I hit a snag with this one and kind of like a mental barrier.
Yeah.
But yeah, I think for next year, like I'm doing the contest again in 2025. I had never been in that situation before. Like I've never been in the US Investing Championship in first place and like a presidential election, like getting gapped down on one of my bigger trades. Like I've just never been in that seat before. So now I know if I'm in that seat again where I'm doing really good on the year, I'm potentially winning a contest, whatever it might be, like now I just have that rep. I've been there before. So, you know, you live and you learn.
There's always something new to learn with trading, so that's perfect. And any kind of last thoughts about the drawdown you had? Because like you said, it was pretty significant, about 20%. Yeah, and any thoughts on going forward, how you might want to, minimize that a little bit more, become aware of it a little bit more? I don't know if you've done any kind of, thinking about about that potential scenario.
Yeah, there's a few things really. So I never really put any credence into that things in your personal life can impact your trading, and I really think they can now. So unfortunately, my father passed away in September,
Mm.
and I was trading through this contest, and I noticed that, something like changed where I just lost my flow as soon as that happened. And so now I know like you have to take a step back. If you're going through like a big life change, you have to really step back and reassess what you're doing because you might enter more of like an impaired state where you're just not feeling your best, trading your best. During that period, I was not even at my regular workstation a lot. I was like traveling back and forth from New York. Just this whole can of worms. So sometimes you don't see the ball as well when you're going through stuff.
Yeah.
And then also just when it comes to making mistakes in trading, I had gone through like a good period where I really was not making errors, where everything was just like, okay, this hit my stop, boom, I take it off. This hit my stop, take it off. Okay, nice winner, like just rinse and repeating. And when you make errors, errors tend to cluster around each other. Because when you make that first error or you take that drawdown from your highs in P&L, then sometimes like that's where you end up trading your worst because that's where those those thoughts creep in your mind of like getting back your drawdown, that sort of thing. So yeah, I think still doing some more reflecting on it, but really just cognizant of, yeah, when you're in your drawdown, that's when you can trade your worst. So really just, I kind of did some rewriting of my rules, looked over my rules again. And yeah, for the beginning of this new year, just kind of wiping the slate clean and okay, boom, that year was that year. Ends up having a good result. So now I just have to keep going in 2025.
Yeah, for sure. And even, being aware of those mistakes in of itself is extremely valuable and can help you many years down the line. So, yeah, best of luck in 2025 for sure. Were there any other, you might have kind of just said it, but were there any other key takeaways from this year that, you'll take forward going into the contest next year, as well as just your trading, any kind of key learnings that you think might be helpful as well for all the different traders watching this?
Yeah, so really just along that same note, this just popped into my mind
Hmm.
where earlier on in my trading journey, if I entered into a period where I sort of went on tilt and wasn't trading my best, that might have resulted in a real blow up or like a real just erasing all of the progress, like that sort of thing where you're pretty much down and out. It's kind of good to go through an experience where you feel like you've traded your worst and you're like, hey, when I trade my worst, now it's not as bad as what it used
Yeah.
to be. So I think like we're all going to have setbacks unless you're just like a completely automated trader. We are all going to have periods where we don't trade the setup correctly. We break some rules, whatever. It just kind of happens. So I think just getting to a point where when you have those bad periods, just trying to limit things as much as you can, kind of giving yourself like a pass where it just happens and trying to move on, trying to develop systems in place where those drawdowns aren't as deep. Because now it's like, oh man, I was coming into 2025 and I have sort of like this renewed vigor for what I'm doing. And I'm like, man, there's still so many ways I can get better. And there's still, I should be updating my trading plan again. And, let me look through the mistakes I made. And it can really be a very good experience. Like if you're kind of keeping your market tuition to sort of a minimum. So yeah, like we're all going to have setbacks. If your setbacks are getting a little bit less, bad each time, like you're still on a good track.
Yeah, I love that. I think that's an awesome takeaway about, how quickly can you get back to center after veering from your path. I've done different podcasts with Jared Tendler, who is the author of The Mental Game of Trading. And we did a class with him as well, and he talks about your A game, which is kind of what you talked about. You're in the flow. Even if you're taking a loss, you're quickly cutting it, moving on. You're on top of things. Your B game, you're executing pretty well, kind of your average, your average trading, but you're doing pretty well. And then you've got your C game, which is where you're gonna have your mistakes, go on tilts, experience the bigger losses, that type of thing. And he talks about, over time, continuously improving your C game so that your C game gets closer and closer to your A game. So even when you're in your C game, you're still, like you said, not feeling the ill effects as much. So I think that's an awesome takeaway. So appreciate you sharing that with us.
Yeah, for sure.
Yeah, perfect. Just a few wrap-up questions. I may have asked you this in the first podcast, but I do see some training books behind you. Do you have any recommendations for people watching this who, want to, increase their knowledge base? And obviously, books are a fantastic way to do so.
Yeah, one book that I read in 2024, Best Loser Wins. Such a good trading book. And I remember reading it on vacation and everything resonated in the book. And it was just really all about cutting your losers fast. And he even talks about in the book of potentially adding to your winning trades. And that really just, sparked a light bulb for me. Because a lot of times with these messages, like once you've read, let's say like 10 or 20 trading books, a lot of what you're going to be reading could, in theory, be a little bit repetitive, but it still helps so much to just get the right messages repeated into your brain. Because, like, for example, when we go on social media, we might not be getting the best messages. When we're reading the news, we might not be getting the best messages. So yeah, that book, Best Loser Wins, absolutely fantastic. I would highly recommend it. And I did my best trading of the year, pretty much right after I finished that book. So I'm actually rereading it right now.
Yeah, is that Tom Hugard? Is that the author of that one?
Yep. Yeah, so
Yeah.
that one's really good, especially a lot of people like they have read a bunch of books, maybe they've done a lot of courses. They've got systems in place that like in theory should be working, but maybe it's not clicking yet.
Hmm.
I find that's a really, really good book that almost anyone can read and they'll get value. And then of course there's like the classics like Mark Minervini's books, How to Make Money in Stocks, like those sorts of things. But yeah, I'd recommend Best Loser Wins to anyone.
Perfect. I'm just going to stop your share real quick here.
Yeah.
And this has been fantastic, Andrew. There's definitely a lot of key takeaways that I've had personally. I'm sure everybody watching has as well. Is there any last bit of advice that you want everybody to walk away from this interview? Yeah, any kind of last bits of wisdom that you think, if you were watching this as a beginner trader, what would you want them to walk away with?
Yeah, I would say just keep practicing. This game, it's really all about longevity. Because, if you really want to succeed in trading, hopefully you're doing this for, let's say, like 10, 20, 30, 40 plus years. So really just always have that beginner's mindset and just try to build a system that works for you. The other thing I've been noticing as I work with traders is the transitions from one market environment to another can be really, really difficult for traders. It's still difficult for myself as well. So I think just understanding that there's going to be certain market environments where you can make a ton of money very quickly, and then you can, just as quickly transition to an environment that's totally different where it's a lot harder to make money. So yeah, just taking a longer term approach. And what I've noticed through my journey is, I'm not making money consistently every single month. Like there's periods where you draw down, periods where you're more more stagnant in your trading. So really just thinking about it with a long-term perspective and thinking about years and decades in this journey.
Yep, we all want to be doing this for 30, 40 years so we can get that compounding going, but I think that's very well said. And I'll also, by the way, I'll drop the link to the Best Loser Wins down below in the description for everybody who wants to pick that up. And then also I'll drop the links to your website. Andrew, maybe mention where can people reach out to you if they want to get in touch, and we'll have those links down below.
Yeah, so if you visit pristinecapital.substack.com, every single evening I take my market homework and I turn it into a research note and I share that with subscribers. I also have a Discord server that, if you subscribe, then I throw you in the Discord server as well. So we've got a nice community of traders and everyone is just trying to get better and, put in good years and just not do this alone. So definitely, yeah, feel free to check out pristinecapital.substack.com.
Perfect. Well, Andrew, thanks again for your time. Congratulations on 2024. Hope you blow that out of the water in 2025. We'll see what the market has in store for us this year. But thanks again for coming on. And to everybody watching, I hope you guys really enjoyed as well. Make sure to leave a like down below if you did. Subscribe if you're new to the channel. And we'll see you guys in future videos. Take care.